take your rally caps off and get that finger over that sell button. I'm here with Mark Newton from Greywolf Equities. So Mark, you feel that we only maybe have about 2% upside, but a possible 10% downside. However, traders have been wanting this correction for a long time. We have not seen it yet. So why do you think it's coming?
Well, you're right. I mean, there's been a big disconnect between what's happening in Europe and emerging markets and the U.S. I mean, the U.S. continues to be largely range-bound. 1535 on the downside is support, 1560 on the upside. There are a lot of things that are troubling, though. Momentum continues to get lower and lower on these rallies. The percentage of stocks hitting new highs has started to drop off. Volume has been a concern recently. You have a number of stocks, like the metal stocks, like a lot of within materials. Now in financials, the broker-dealer stocks are starting to roll over. The large cap industrials are starting to roll over. So those are stocks that it's tough to be really bullish on the market when you have a large percentage of the groups that are starting to make new relative lows versus the S&P. There are still some bright spots, obviously. Home builders, retailers, the beverage makers within consumer staples, pharma and biotech continue to look strong. However, yeah, it's very, very splintered at this stage. And so when you have sentiment as high as it is, with everybody thinking the Fed can save the world and provide this safety net, people have gotten bullish, understandably so, after a 13% rally in 4 months. And the market right now is up 10% year to date, but yet it's largely defensive-led. So it's a lot of the healthcare and a lot of the staple stocks that are making the moves. Financials has already had its move. It's starting to stall out, as well as industrials. Those are just a few of the things that concern me at this stage. This rally is setting up very similar to the last 3 years, where Europe starts to tail off first and the U.S. eventually follows. And so we've seen minor signs of that here in the U.S. We really need to get under 1535, I think, at a minimum in S&P futures, and largely right near 1515 to 1520 would suggest a bigger pullback is starting to happen. That might be put off until the latter part of April, but
yeah, but you're kind of saying that we'll follow on to follow on to Europe, but Europe's a much different picture than we are right now. I mean, clearly with the euro, their financial crisis, Cyprus, I mean, I think that's a tough comparison.
No, but we're all interrelated, much more so than we have been in the past. I mean, the correlation over the last few years, there hasn't really been too much of a pullback and correlation. And so when emerging markets start to tail off and Europe starts to turn down, the U.S. eventually does follow. And if you look at over the last few years, you can see turning points in a lot of these indices all in the same place. I'll mention one thing. Treasuries are now at new monthly highs right now if you look at 10-year treasuries. So there's definitely a flight to quality and flight to safety there. The dollar has hit new 9-month highs, which is also interesting. The euro continues to go down, and obviously 65% of the DXY is euro, and so that's hitting new lows. I think we probably get down to one spot 26.90 or so on the euro, slightly below 127. Sentiment's starting to get more bearish, so you could see a little bit of a bounce in euro and dollar sometime over the next week. But in general, there are a lot more warning signs right now than you do have bullish technically.
So you think that pullback could happen between April and July, you were saying?
That's right. I think the maximum upside for the S&P is around 1570 to 1575 on the upside, and downside, last November we hit lows in near 1350. So I think potentially you have about 1.5 to 2% max upside, and a downside probably 10 to 15% between now and the fall.
All right, well, it sounds like, according to Mark, if you're looking for some good prices as you hit those sell buttons, you got maybe about 2% more upside here to take some of those profits. Otherwise, it sounds like get ready for a rough late spring. That's Mark Newton from Greywolf Equities, and I'm Debra Borchardt with TheStreet.